In addition to what happens in Mexico, there's the question of what happens worldwide with international investors. Right now, there are a lot of international fund managers that are investing in microfinance, and that includes some who are investing money that has a strong social orientation, where maximizing the profit on their investment is not necessarily part of the picture. It also includes plenty of others where the social orientation is there in a very secondary role, if at all, and where their investment criteria are just like any other commercial investor's criteria. There's no doubt that the huge and highly visible success of that Compartamos sale of their shares in the public market added to the interest on the part of international investors in placing funds in microfinance. And the flow of those funds is getting to be very significant now. It's on the order of billions of dollars a year that is coming from international fund managers. I think it would be hard to argue that the Compartamos deal didn't help that process along. When we look at Compartamos, are we looking at something that's once-in-a-lifetime exception, or are we looking at something that we can expect to see more of as the years go by? Well, let me divide that in two parts. First of all, the huge profitability of that public offering. I don't think we're ever going to see one that looks that good again for a long, long time. And there's two reasons for that. One of them is that there were some coincidental and accidental reasons why the price went so high there. When they put those shares on the market, it just so happened that there wasn't very much by way of Mexican securities on offer, and you have all sorts of international funds who've got a quota that they need to fill for investments in given countries and markets. So it was a real seller's market. There was tremendous demand for Mexican securities at the time, investable Mexican securities, and there was a very low supply of them. And the Compartamos shareholders got a huge boost because of that. As a matter of fact, the expectations, even a few months before the sale, what they thought they were going to get out of the sale was something like a third of what it actually produced. The other reason is that the interest rates and the profits in the case of Compartamos were really very unusual. All of the public controversy and discussion of this case has created an impression that there are lots of microfinance institutions out there that are charging rates that high and making profits that high. I recently completed a paper with a couple of colleagues that looked at interest rates of microfinance institutions around the world and whether or not they looked abusive. And we found some interesting things. One of them is that of all of the borrowers out there in institutions that we have data on, and we've got data on more than 1,000 institutions, only 1% of those borrowers are paying a rate as high as what Compartamos was charging. The average rate that microfinance customers are paying to their institutions as of the end of 2006 was slightly more than 26%. What is particularly interesting to me is that between 2003 and 2006, which were the most recent years we had time series data for, it looks like the interest rates that microcredit clients were paying dropped by about 2.5 percentage points each year. In other words, the rates are falling very fast, which is obviously an encouraging sign. Some of that may be due to competition, but a lot of it is just due to the learning curve. Microfinance is a new business. The microfinance institutions that account for most of the borrowers are now getting to be more mature institutions, and as institutions mature, they learn how to lower their cost per borrower very significantly. What about profit levels? We found that For microfinance institutions, the average return on shareholders' equity was a little more than 12% a year. If we want something to compare that with, we can look at the average return for owners of conventional banks. And I'm talking only about developing country institutions now. That is, more risky countries as a group. And the return for shareholders of private banks averages 5% higher, more than 17% a year. So there are certainly plenty of institutions that are profitable, but the number where you have profits in the neighborhood of 50%, the way Compartamos did, is vanishingly small. There is a group of institutions, let's say the top 10%, that are making profits that certainly would provoke some criticism from people who think that social concerns ought to be the major driver. There again, many of those institutions are like Compartamos, where most of the profits, most of those high profits, are going back into a not-for-profit organization who's the majority shareholder. So those profits simply fund more public service work. But there are substantial amounts that are going out to private pockets. So I don't want to say that questionable profits going to private investors is unknown in microfinance. There are cases, but it's important to keep the eye on the big picture. And for the vast majority of institutions, the interest rates and the profits are in a range that doesn't shock the conscience. We also found, incidentally, that profits were dropping over that 3-year period by about 1/10 a year, which is a substantial drop. And the other encouraging thing that we found was that the cost of the lending was also dropping by about 1% a year, which is good news because that obviously feeds into the drop in interest rates.